Alright, hello and welcome to Camel Finance. I'm your boy Camel, and this is a bear market of historic proportions. You can see before 410 days down, 75 to 80% drop. Then we had 362 days between the high and the low for, let's call that an 83%, 82% drawdown. And then we had 260 days with 75%. Now, I don't like to count this as an actual bear market, and the reason being is this was a bear market rally, a rally off of the bear market lows, and it just went up a bit too fast in my opinion. Technically, this was a 14k high, I think, and so some level of consolidation here was absolutely to be expected. And I think if you were to draw a line under these lows here at 5 to 6k, then we would have probably bottomed out around there before resuming an uptrend. Of course, this was the whole pandemic plunge, the C-19 thing. So I think we just got a little bit panicked and oversold on that news. The whole world was in panic at that time and everything has this same shape. Markets everywhere just nosedived. So I don't know if you count this as a bear market, but I guess technically it was off 20% of its highs. I'm not sure if that applies to Bitcoin because it's a 90 volt asset class. But either way, if you take this first Wyckoff distribution as the top, then it's been 435 days, and we're currently down 73.3% from the highs. However, what if this was the high? Then it's only been 227 days, so that's not too bad, although it probably implies that we got a little bit more to go. Grayscale is saying the same thing. 2022 bear market is the worst in Bitcoin history. However, I'd like to point out that bear markets is where people make a lot of money. They just don't know it at the time. It always feels horrible to buy the blood, but if you don't, then you're literally never going to be able to buy low and sell high. Keep in mind that despite the price action, Bitcoin is being adopted, and adopting Bitcoin will benefit generations to come, says the president of the Central African Republic. And he's absolutely right, of course. I'd like to quickly pause here and just point out that if you're not subscribed, then that puts you in the 61.2% of my viewers. So if you could just go ahead and hit that subscribe button, I'd appreciate that. In other news, some bad news. Russia has defaulted on its foreign debt for the first time since 1918, and this is likely causing the UK and the US to ban imports of Russian gold, which is closing down a 15 billion a year industry. So I don't know what's going to come off the back of this, if anything, but I would expect that this is likely not a good thing going forward. A little bit more bad news before we get into some good news. Coinbase now requires KYC, know your customer, from its users in the Netherlands. So KYC would be the thing that you may be familiar with, where you have to send in some identification, driver's license, passport, something like that to an exchange before you're allowed to trade in any significant size at all with them. So this is bad for privacy, but it does make it a lot easier for regulators to justify rolling out crypto. Not that you need permission. Of course, if they ban it, if they don't, it doesn't make a difference. You can still get to Bitcoin, you can still use Bitcoin, but this is something that we would prefer not to see in the Bitcoin space. Stock money lizards are saying that we're about to enter this bullish phase on this ESC Go indicator. Apparently this thing is dynamic and adjusts to the constantly changing market cycle length. So as and when this takes green, that should be confirmation of a new bull market. Where's it going to come? Nobody really knows, but I suspect in the next 3 months. One of the reasons I'm so bullish on Bitcoin is this is inflation. The proportion of countries with high inflation has exploded. So the blue would be emerging economies, and then the pink will be advanced economies. And a quote here, leading economies are close to tipping into a high inflation world where rapid price rises are normal. They dominate daily life and are difficult to quell. The Bank for International Settlements warned on Sunday. And if you think that's bad, then wait till you see that Lebanon's inflation just hit 211% in May. So you can hold fiat, that's your choice. You can hold Bitcoin or gold, that's also your choice. But I know which ones I would personally rather hold. I saw this as well, and this is one of the main reasons behind this channel, is to provide education. So it says here, Brits please sign. It's costing me £100 to fill my tank. Disgusting. This is why food prices are going up. The cost of transporting them by lorry. And so there is a petition at the moment in the UK in which you can sign to ask them to cut the tax on petrol and diesel on fuel by 50%. The reason I'm bringing this up is because this person is adamant they understand what's going on. They're saying this is why food prices are going up. because the cost of transporting them by lorry, because fuel's going up, and therefore food's going up. And while this may be a small factor, I wrote nothing to do with the increase in M2. Okay, these people, your average Joe, they just do not understand what causes inflation. Okay, look at, this is the United Kingdom M2 supply. Okay, we hit the pandemic era and they just printed and printed and printed. What about in America? You know, we hit the C19 era and look, parabolic, just goes straight up. This is why fuel is high. They'll blame anything they can. This is why food prices are going up. Okay, it's not solely a case of, I'm not trying to pick on this Dory gender atheist. They don't make it easy, do they? I'm not trying to pick on this person, but you know, this just goes to show, this is why I do what I do. This is why I tried to put this information out there, because whilst, you know, fuel prices going up does increase the cost of transporting things by lorry, whilst that is true, the vast majority of the food price inflation comes from this, from them creating money out of thin air. When you create money out of thin air, like they did, it devalues and debases that money. Okay, and you can see this in the charts. I've got here the dollar against the pound. You can see that the pound is losing value against the dollar, and if it's easier for you to comprehend, if I do it, this is the inverted chart. So now you can literally see the pound plotted against the dollar. And you can see the pound is losing value against the dollar tremendously. Oil is first, as you can see from this chart here. The standard, I'll put it back to the right way up, the standard price is oil denominated in dollars. This is what we use, the petrodollar system, right? So to say this is what's causing food price increases is rather misguided. And again, I'm not trying to pick on this person with a funny name. I'm just trying to illustrate a point that people do not understand this concept, and therefore I strongly recommend you subscribe so that you can build on your knowledge and understand these sorts of things. I want to move now onto ETFs. I've covered before that we've got this SEC decision coming on July the 6th, which is rapidly approaching now, isn't it? Like a week and a couple of days. So we'll find out if we're going to get the first spot Bitcoin ETF. But I've got a whole bunch here of ETF related things. BlackRock, Bitcoin is highly disruptive and innovative, says the head of global ETFs. So BlackRock probably wants in on one of these ETFs too. Eric here has pointed out that looking pretty possible that the launch of the long and short Bitcoin ETF marked both the exact top and bottom respectively. So they launched a long Bitcoin ETF at just so happened to coincide with the peak, okay, BITO. And now they've launched a short Bitcoin ETF, which likely has coincided with the bottom, or at least very close to the bottom. What's even more interesting about this is we've got a long futures ETF, we've got a short ETF, and you realize that we've got a short futures ETF before the approval of a spot Bitcoin ETF. And then Will Clemente says, so there's now a short Bitcoin ETF, a futures ETF, a closed-end fund trading at a 30+% discount, a 401k option for Bitcoin, but there's no spot ETF. And so how does this make any sense? Well, it's quite clear that certain people at the SEC have got an agenda against Bitcoin. However, I would like to speculate that possibly now that we have run the price down, now that we have seen the likes of Goldman trying to buy up bankrupt companies such as Celsius's assets for pennies on the dollar, are these players, are these big names, are the people that control the finance industry, are they ready to step in? Are they ready to step in and approve this spot ETF and send this thing to where it was always destined to go? At the same time, Skybridge, I've covered this on the channel before, they're going to file for a spot Bitcoin ETF this week. Futures are cash settled, a spot of course will be Bitcoin settled. And so we've had a bearish cross, which marked the bottom for 2014-2015. We had another one, which marked the bottom for 2018 and 2019. And just recently, here it is again, likely marking the bottom or close to the bottom for 2022. I'm lining up a trade, so I'm just going to sort of let you know about this. The dollar is currently mostly sideways, isn't it? Has it got to make a new high? Has it got to continue up here? I don't know. But we'll keep an eye on this. We know this is going to break down in the not too distant future, but I do think it might be slightly early, as I've been saying over and over again. Bitcoin, where's the volume? where is the volume here? It's absolutely completely missing, isn't it? And this kind of tells us that we are possibly looking to drop down into this 60-day cycle low. Do we retest? Do we sweep the lows? Is it quite mild? Do we hold above the 20k high? Who knows? Time will tell. But one thing I do know is a little bit more patience is going to go a long way in the not too distant future. Ethereum is going to be much of the same, isn't it? It will follow Bitcoin. The equity markets is where I want to point out a trade. I think the futures at the moment are slightly green, but I think that once we get up into this neighborhood here, I'm going to draw a little area of interest here. So I've drawn that. The reason I'm drawing this is because if we get into here and get rejected, this is going to set up a nice short. So if we break this level, then we'll be looking to take longs. But I think first we have realistically got to get rejected somewhere up here and then look for a short. And then once that short closes, we can actually flip long, break this trend line, and begin what I believe will be a risk-on rally. So we're not quite there yet, but we are getting closer. Oil is it's into resistance, isn't it? The question is, does it break out and tell us that we've got to be prepared for much more severe CPI prints? Or is this going to break down and tell us that we may well have seen peak inflation? Of course, peak inflation being peak by their make-believe CP line number, but nevertheless, that's the metric we're going to go on. So we do want to see this breakdown for oil not rally strongly out of here. If we rally strongly out of here, then that's likely going to tell us we've got a lot more hot inflation CPI prints coming our way. But if this can break down, then get ready for risk on rallies, I think. Gold is still inside of this, but barely. It does look like it wants to make some sort of drop down, doesn't it? But we'll see how that goes. Silver still in here for now. I think we've got a well-established downtrend, haven't we? Something like this. Can neaten this up. So the question is, does it want to sweep the lows first and then go, or are we going to break out and go again? We'll find out soon enough. Again, I think a little bit more patience is going to yield massive opportunities for towards the end of the year. So I look forward to that. And lastly, let's take a quick look at bonds. Bonds looking to get a bounce. The Fed is going to need to start doing yield curve control in the not too distant future because it can't honor this amount of money. It can't honor this amount of yield. So the Fed will go broke if the yields keep creeping up, and therefore it's going to have to start printing money in order to buy bonds and put a bid underneath this and force the yield back down. So I don't think that we're going to see a massive rally from bond yields here, but of course I could be wrong. I'm open to being wrong. Just got to take it a day at a time. So I hope you found value here today. If you did, I'd appreciate if you could subscribe to the channel, drop a like on the video, and I hope you're doing well in life. The sun has come back out here, so I'm going to enjoy that for the rest of the day, whilst I wait to see if the S&P sets up for my short. And in the meantime, I wish you all the best. Take care.